So for some, it is a relatively low 10%. For others, like Europe, 20%. Others, around 50%. For China, a staggering 104%. A fresh wave, then, of US tariffs taking effect against dozens of trading partners as Donald Trump's trade war ramps up. Customized rates for nearly 60 economies. As Trump himself has told supporters, I know what the hell I'm doing.
Additional tariffs on Chinese goods are in place effective midnight tonight at 104%. Until they make a deal with us, that's what it's going to be. I think they'll make a deal at some point. China will. They want to make a deal. They really do. They want to make a deal. They just don't know how to get it started because they're proud people. These countries are calling us up, kissing my ass. They are dying to make a deal. Please, please, sir, make a deal. I'll do anything. I'll do anything, sir.
Donald Trump there. Well, our business editor, Charles Pellegrin, is joining me now. We're going to start, Charlotte, with a look at the markets. How's it looking?
We're seeing most major indices in Asia in the red, trading negatively as that 104% cumulative U.S. tariff on Chinese goods is now in effect. The Shanghai Composite, though, bucking that trend, responding favorably to pledges of support from the Chinese state and also interest in the Chinese tech sector, currently trading 1% higher. The Nikkei in Tokyo, though, leading the losses by a significant margin, closing the session down just under 4% lower. This after quite a sizable rebound on Tuesday. So a bit of a seesaw there as Tokyo and the U.S. are in talks over the reciprocal tariffs and auto tariffs that are deeply affecting the Japanese economy. The Kospi in Seoul, as you can see there, closing down over 1.5% lower. It has officially entered bear territory. This means 20% lower than its most recent high in July, and signifying a market where investors are looking to avoid risk as opposed to seek it out for potential opportunities. Let's also check in on oil prices. Always a good gauge of investors' sentiment with regard to future economic demand. Both the West Texas Intermediate and the Brent crude benchmarks trading lower this hour. The West Texas Intermediate had hit a recent peak of $80 a barrel back in January. And as you can see there, currently under $60 a barrel.
Going to focus a little bit on China now. What effect could this 104 cumulative tariffs on Chinese imports, what effect could they have?
Well, some Wall Street institutions like Citibank and Natixis this week have already taken this into account when they revised their growth forecast for China in 2025. Both banks had previously bet on 4.7% GDP growth and have now downgraded that estimate to 4.2%. For reference, Beijing's objective for the year has been set at 5% growth. One other interesting point here is that a lot of analysts predict a diminishing impact the higher tariffs go, pointing to the fact that at one point there's a ceiling at which tariffs stop having more of an effect.
Let's have a quick look then at why some of the reasons Donald Trump is doing this. I hope of raising revenue, of course, for the US government.
Trump and his team's economic vision has been to increase tariffs, import duties as a way to offset the slashing of taxes domestically, like income tax or corporate tax, and in a way recreate what the U.S. economy and U.S. public finances looked like at the beginning of the 20th century. Trump was keen to emphasize the revenue generated by these tariffs at a Republican gathering on Tuesday. Take a listen.
We're making a fortune with tariffs, $2 billion a day. Do you believe it? I was told $2 billion a day. You know, I get hit by the press about tariffs. We're making $2 billion. This isn't 35 million, that's peanuts. $2 billion a day. And then they say, gee, they don't know. You know, this is only the enemy can be talking this way. In addition, we have a lot of countries coming to see us that want to make a deal.
His main trade advisor, Peter Navarro, had projected that the tariffs would generate in total $6 to $7 trillion in revenue over the next 10 years, and that would be able to fund an extension of Donald Trump's 2017 tax cuts and other tax slashing promises the president made on the campaign trail. But not everyone agrees With that calculus, the Nonpartisan Tax Policy Center believes the tariffs would raise some $3.4 trillion from now to 2035. And they explained that lower estimate partly by saying that there will be fewer import purchases to tax on account of higher tariffs, that retaliatory tariffs would hurt U.S. economic activity and thus lower corporate, individual, and payroll tax revenue.
Another rationale for Trump's policy is bringing manufacturing back to the USA.
One aimed not just at bringing foreign firms to invest in America, but also at forcing U.S. companies to onshore their own production lines. Squarely in the firing line is one of the country's largest tech giants, Apple, whose top-selling product, the iPhone, is made in Asia. It's a tense situation for the California-based firm. If it were to actually produce the iPhone in America, its price would have to rise dramatically. Brian Quinn and Munya Benaissa have this report.
Could Americans soon be paying several $1,000s for a new iPhone? Apple's landmark smartphone is set to be impacted by Donald Trump's tariffs, as most are assembled in China, whose products are now subject to a 104% import duty. Some analysts say Apple's costs could rise as much as 43%. If that's passed on to the consumer, the top-of-the-line iPhone 16 Pro Max would go from a $1,600 retail price to nearly $2,300.
I would not pay $2,300 for an iPhone, for the newest iPhone, for any reason.
For an iPhone,
Never.
Definitely not.
No.
Apple's top supplier in China, Foxconn, is notorious for its grueling demands on workers, whose pay is less than $4 per hour. If Apple were to actually relocate its production lines from China to the U.S., the price of an iPhone would likely have to triple.
If you like $3,500 iPhones, we should build them in the U.S. If you like $1,000 iPhones, you build them in China. That's the reality, and that's why this continues to be the most absurd thing probably ever seen on Wall Street in many, many, many decades.
Even then, Apple would have tariff problems. Many iPhone components are made in India and Vietnam, who are themselves now targeted with tariffs of 26 and 46%. The iPhone represents 51% of Apple's sales, with its top market, the US. The latest tariffs could cost the company $40 billion, nearly a third of its operating profit. Apple is reportedly exploring relocation of production to India or Brazil. But Trump's mercurial trade policy shifts are making any long-term planning for Apple, as for companies around the world, increasingly difficult.
Brian Quinn there. Before Charles goes, European markets have just opened as well.
Yeah, let's have a look at those figures now. I'll discover them at the same time as you. They're all lower, all in the red. So a bit of a seesaw in Europe as well, as they had recovered during the Tuesday session. Obviously, the U.S. slapping 20% tariffs on all European EU goods entering the U.S., and that has now officially come into effect.
Charles, thanks very much. Charles Pellegrin, our business editor, summing it all up for you here on France 24. Thanks.